In the early 2030s, it would be crazy for you to not have at least some Bitcoin. There'll be seasons and times in your life where you need to spend down. You know, if you're getting married or having a child or these kinds of things. I mean, there'll be expenses and you might need to spend some down at that point. But then hopefully you're earning back at some other point. And there's also a time and a place to do certain things that, you know, maybe you can only do certain things when you're young and physically able. And when you're older, you know, maybe it's a different activity or it's just not the same thing that you can do. And people slow down over time as they age anyway. Yes, there are the people who just kind of learn about Bitcoin and they go all in and they go really soon in the space of 6 months to a year that they've gone down that orange pill journey and they're all in. But not everyone's going to be like that, right? I think the more likely is sort of diminishing returns, diminishing volatility. And that is what we've seen. That's objectively, statistically, that is what we have seen over the last, let's say, 15, 16 years that Bitcoin has had a price. I think a lot of people will get onboarded in custodial ways. Now, that may be triggering or annoying to us because we would like them to learn the self-custodial way.
You're a legend in the space, and I watched your and Saylor's course. The Saylor Academy on Bitcoin is really cool. It's often a point of like, okay, if someone wants to dive deeper, it's like, hey, this is a 12-hour course. It is really good in giving you the fundamentals.
Oh, cool.
So
Thanks.
really cool that you brought that to the community.
Yeah, thank you. Yeah, I mean, it was great. That brings me back. That was, what was that? Late 2020, early 2021, around there. Michael asked me to make a course, and at that time it was just, you know, that was kind of the brief. It was like, make a 12-hour intro, and I pulled some pieces together, and there you go. And I worked with some of the guys from the Seyr Academy course, and it's interesting to see that even these years on, people are still looking at it.
Yeah, I was orange pilled in the 2020 era, so it was right at that time. So it was really helpful for me. I think I watched it probably 2021 somewhere, a little bit later in my orange pilling. But I think it's a really timeless piece, and I think that's the great thing of education. You can make things that still fit. Like you can still send it to someone in 2025. You can make it even bullisher and make it more relatable to the current news, but you don't really have to.
Yeah, well, thank you. Yeah.
Coming to 2025, what is currently the most exciting thing about Bitcoin, and what maybe also has changed since 2020 for you in Bitcoin?
So, yeah, for me, I think it's like every cycle has its own different story and things that are kind of out there. I guess if I'm sort of zooming out and looking at what's happening in these cycles, I can sort of loosely think of it like the 2017 cycle was ICOs and so on, as in that was kind of, at least in the alt land, that's kind of what was going on. Then in 2021, there was kind of all this like DeFi and NFTs and all this other stuff. And it seems this time around in, let's say, 2024, 2025, it seems to me more like it's the cycle of Bitcoin ETFs, Bitcoin Treasury companies. This kind of thing is really big. But in a Bitcoin specific thing, of course, there's also a lot of work happening on things like the Lightning Network and just growth generally there. Things like what's happening in hardware wallets and Miniscript to make it accessible for people there. What's happening at, let's say, Lightning in terms of with Lightning to make the user experience better, and getting things like people having Bolt 12 and reusable human readable names, these kinds of things. So yeah, I think, and then even in the mining world, there's just, you know, there are efforts being made to sort of help decentralize, as you know, things like Ocean and Demand Pool are out there. There's bit axes and things like this. There's just a lot of, I guess these are some of the things that are, I guess, on the conversation nowadays. People are talking about, well, what should be done about censorship? What should be done about the mining pool payout structures, FPPS versus the PPLNS and other forms, or things built based on that. So yeah, I think it's a mix of those things. But then of course at the same time, it's like what's happening in government and corporates, and of course high net worth individuals. So I guess that's just kind of a flavoring of what I guess is on a lot of people's minds.
It's super interesting, this cycle. I talked like a few episodes ago with Danny from Coin Corner about that, because he brought up an interesting report. And he basically said, like, if you only look at retail, we're still not in a bull market. It seems like the bull market is just in the institutions, and also like Google Trends and a lot of other things kind of supporting that. Why do you think this is? I like just one small preface to that. I personally thought 100K will be a trigger point, and I was deadly wrong about that. Retail did not seem to care at all outside of the Bitcoin world. How do you look at retail is not really in the bull market, but institutions and nation states all of a sudden are really piling in?
Yeah, I think it sounds cliche, but it really is just early. Like, I think it's just that, think about when I was a noob in 2013, I just thought it was so obvious, right? Like, I was shouting it from the rooftops, and I was surprised that more people were just not like instantly getting it. Now, I had a few friends who followed me into it, and they were very thankful for that, but a lot of them didn't. And it just took time. It just takes time. Think about how much of a shift it takes to really start thinking, okay, I'm actually going to start using this money that's outside of the state and all of these things. I think for a lot of people, it's a big lift. And I think maybe in the earlier years, we kind of hit this saturation point in terms of the more libertarian, cypherpunk-minded people. And so now the new people coming in are not so libertarian or cypherpunk or cryptography or any they're not so into any of those things. And so that's been one thing that's maybe a little surprising to me, is just how, as an example, like if you go to mempool.space, it's quite low right now. There's not that much activity going on. I think it's because ETFs and Bitcoin Treasury companies like Strategy and MetaPlanet and so on, that's where a lot of the new people are coming, at least for now. So I think that's why, and I think that may come later. Like, we may get the kind of retail sort of frenzy later on, maybe later this year or early next year. I still think it's coming, but I guess the way I'm seeing it now is institutions and let's say the people who are buying ETFs, they have a lot of money as well. And so, and I think the other thing is, if I think about it this way, now, of course, from the decentralization point of view, of course, not your keys, not your coins, always and forever. But I think there are a lot of people for who, in past cycles, they would have gone to, let's say, Coinbase or Binance or whatever, or BitMEX, maybe not BitMEX, but Coinbase and these others and Gemini and whatever. Whereas now, I think a lot of those people are going to, let's say, the ETFs and Bitcoin Treasury companies. So it could also be that even smaller, quote unquote, retail is just buying on their fiat stockbroking terminal or app. So it could be that too. So I think I'm trying to zoom out and stay focused on and understanding what's happening. And I think there are times where maybe we can end up being caught up fighting the battles of the past, as an example. So now, of course, as to bring it to, again, reiterate, not your keys, not your coins. And I think there will be people who need to learn that lesson the hard way. But I think we are maybe a little ways off from that, from kind of the next kind of FTX style event. Maybe that happens. Who knows? But I think that's why there's an importance to kind of teach people those things, like, hey, not your keys, not your coins, or hey, learn to run your own Bitcoin node, or hey, use your own hardware, and this kind of, use the tools, learn how to use it for yourself. So I think those are all there, but we also can't deny that for a lot of people that they just find it more convenient, right? They may not be as, let's say, cypherpunk or libertarian minded, and for them, they're just happy to just buy it on a terminal, and that's it, on a stockbroking sort of terminal or interface.
Yeah, it makes me really think of how adoption will actually grow, because sometimes we have this belief, and I'm not sure if it actually works out like that everyone will understand Bitcoin to a certain degree. I actually think that there will be a small group of people that actually understand Bitcoin, and the other ones are just using it the same way as in internet adoption. Not everyone really understood what a TCP/IP protocol is and the technical technicalities, but everyone likes to use Facebook and WhatsApp and on all those applications on top of the internet layer. And even when I see now in my family, there are family members that are orange pilled that really understand it, but then there are family members that okay, I think Robin gets it. I don't understand Bitcoin, but I will buy some just in case I don't miss out if he gets wealthy from it. And there's like this group things of it. So I'm wondering a lot of how many people do we even need to really orange pill, and how many people will just follow the crowd when the Bitcoin price is going up and the Bitcoin gets integrated in the fiat systems and those kind of adoption questions?
Yeah, it's a good question. I don't know if there's any really good answer to it, but I think I'm just recognizing that I think a lot of people will get onboarded in custodial ways. Now, that may be triggering or annoying to us because we would like them to learn the self-custodial way. But another way to think of it is just, look, there were only so many people who were going to do it that way. A lot of people will just do it in a fiat custodial way. Of course, it still matters to teach enough people to do this because I think in some sense, more people knowing how to self-custody, it acts as a check, right? It acts as a check against the system. It acts as a check against fractional reserve, these kinds of practices. So in that sense, yeah, it still matters to teach people about these things and talk about them and make them important so that people understand, or at least help make people understand the importance of doing them. But yeah, what percent of people coming in do we need to teach that? I don't really know. I think the important thing, though, is that when you want to self-custody, people can do that. And I mean, who knows? Maybe that prices people out over time. Like maybe over time, maybe not now, but maybe 10 years from now, maybe there will be people who are priced out. But we'll see. I mean, some of that also depends on like what other technology we get. Do we end up having some other scaling technique or efficiency technique that allows more people to use Bitcoin in a self-custodial way? I think it's it's an open question for now. But I think I would say the way I'm sort of looking at it is I think there used to be a lot of people doing like on-chain transactions, and now it's sort of like a lot of those people have moved to either using Lightning or maybe they're using custodial things like custodial Lightning and so on. Because I think that to me explains why there's very little on-chain transactions, at least right now. And maybe when retail shows up, and maybe when some more of those people have learned to actually withdraw and do self-custody, then we'll start to see a pickup again. But maybe it's just going to be this kind of cycles, kind of pendulum swinging thing there, even in terms of on-chain transactions.
Yeah, it's kind of fascinating. I just paid someone yesterday with Bitcoin. It was, I think, $500, and I paid 70 cents for the transaction, which is nothing. All the fees on the fiat rails would have been, I think, 3 or 4 euros for the same transactions, and it's kind of amazing. And I love how Bob Burnett puts it, like we are now driving in a Rolls Royce, and it won't be forever that cheap to drive in a Rolls Royce on the main layer. We have to get used to the upper layer things. It's an interesting time to be alive. Bitcoin price is quite high for the low retail interest, I feel like, and also the importance of running your own node and self-custody is extremely important. But I just see like it's really hard to get that through to people. I made a poll last time, how many people do self-custody that watch my channel, and it's not even half. And I preach self-custody almost in every episode. And then if you ask like, wait, if you do self-custody, are you also running your own full node? Then most people drop out. It's
right. That's like another big filter level. Yeah.
It's super important. Can you make the case for people that maybe are listening now and maybe don't have self custody or only have self custody and not run their own full node? Why they should care about that, especially when they are so early in that revolution?
Well, fundamentally, it comes down to you having possession of your own coins rather than leaving them with somebody else, right? Like the analogy might be, it's if you believe in, let's say, gun rights, but you leave your gun locked up at the police station nearby instead of, having it available to yourself. Now, I don't know, maybe in some audience that might be a controversial kind of argument or statement, but I mean, the point is more just that if you really value this thing and you really want to make sure you still have control of it, then I think it benefits you to learn. Now, maybe for some, and it could be that you don't necessarily have to self-custody 100% of your stack. Maybe if you are a trader, maybe you have to leave some of it on another platform somewhere, or maybe you're using, I don't know, who knows, if you're doing like a loan thing or whatever. But hopefully that's only a small percent of your overall holding and that you're keeping most of it in your self-custody, so that way you're not running the risk of getting Mt. Goxed or FTXed or these kinds of things. So I think that's one thing. Now, people could argue, okay, look, that was the past and now that's not as much of a risk now. I mean, who knows? I think people will just kind of have to learn these lessons over and over again. So that's one thing on the holding your own keys side of it. On the running your own Bitcoin node part of it, I think that part of it is more about making sure that you are being self-sovereign as a Bitcoin user. You are verifying the transactions. You are verifying that you hold those coins. You're not waiting for somebody else that could be lying to you about that. So when you connect, let's say, your cold card with Sparrow Wallet and you point that Sparrow Wallet to your own Bitcoin node, it gives you just a much stronger level of assurance that, yes, you really have coins. Nobody's lying to you about that. You got sent those coins correctly and validly. So I think that's kind of, in a nutshell, that's the key thing. It's hard to impress that upon somebody who is not that focused on that, because maybe they've got their coins on whatever IBIT or whatever other custodial form of Bitcoin. And so, yeah, we'll just have to wait and see. But at the same time, I do recognize that these are oftentimes the first touch point for people, right? That may be the first coin, like the first coins people might have held before historically might have been on custodial exchanges like the Coinbases of the world and so on and others out there. And then over time, it might have, once that number rises, I think, let me put it this way for listeners, if you are holding coins in some kind of custodial form, it could also be that maybe this is not a large percent of your net worth, or it's not a meaningful number for you. And as that number rises, right, as NGU, as number goes up, it'll start to become more important to you. And then you'll seek out ways to do self-custody. And for a lot of people, they might be scared if it's their first time. So you can sort of start with a small amount and these kinds of things. These are ways to ease that transition. But I mean, that is in a nutshell why you should think about holding your own keys and running your own node. And importantly, not just running your node, but connecting it with your wallet so that you are actually using it as part of the transaction. So that's the reason why.
Yeah, there's so many interesting things in there. So most Bitcoiners don't have like 50% or 100% of their savings in Bitcoin. Most of them have just like a small portion. When you look in your own circles, maybe it's relatable. But you mentioned something interesting, the loan thing, this idea of borrowing against the Bitcoin. I think that's what you're referring to. This gets more and more popular. How do you stand on that to get not yield, but get fiat liquidity to pay for things without selling them?
So, I mean, in a sense, you can think of it as BTC yield at the personal level. It is theoretical. But now, that said, I last cycle around was quite cautious on this. I did a podcast with Andy Edstrom, and I think we actually got lucky with the timing, but we basically said, like, don't get wrecked on these things. And pretty soon after that, like, a bunch of these things all got wrecked, right? Like, that kind of around that time, pretty soon after that, it was like BlockFi got wrecked and all these various lending platforms, and Celsius went down and 3 Arrows Capital went down, and later in that cycle, FTX went down in that bear market. So there's always a risk, but I think I'm not opposed to people doing it full stop, right? There are these services, things like, Unchained Capital, Let-In, HODL. I think Bitfinex has a borrow thing. I know there's one called Firefish. There's that Lava one as well. So there's a few of these out there, and that's just the ones I can think of at the top of my head. I'm sure there's many others, but I'm not opposed to people who are doing it, but I'd make these few important cautions. One, make sure you're managing your risk by making it a small portion of, your overall stack. Ideally, if you have income that you are using to pay that, then that can help you also. And yeah, I just think monitoring sort of what's happening there and understanding what are, let's say, the liquidation ratios and levels. So I think those are important things to think about. I wouldn't necessarily say it's for everybody. Some people, they just have a blanket, no debt position, and totally fair enough. I personally, I hold zero debt, at least right now. I haven't engaged in some of these. Now, but I'm not opposed to it. I think if you were very, very cautious and very judicious about it, I'm not opposed to people using those things, but I would just say be very conservative in how you do that, and be like, you should do up a spreadsheet and calculate out some different levels and some different numbers, and make sure it's below a certain percentage of your stack, such that you are not levering up too high, too heavily. But I think it can make sense if you are kind of very prudent about it and doing very small levels of leverage. But when I say that, I should also caveat, I think there are people who are not good at this kind of thing, and they should just totally avoid it, because for them, they may not be good at being financially prudent about these things, about making sure things are within safe, very low levels as a percent of your overall stack. And maybe you're better off, most people, it's like with trading. I believe probably 99% of people who try trading will lose. So, maybe it's not quite that bad, but it's one of those things where it's you need to understand what you're doing before you really do that. And for many people, the safe obvious thing is just live within your means, stack sats, ideally into your own hardware wallet or multi-sig, and just do that for a long enough period of time, 5 to 10 years, and then from then on, you generally will be in a good position, because by then you've been saving. That'll be quite pretty good for you. That's how I'm thinking about it. So yeah, short summary. I'm not totally against it, but I'm just I would say be very cautious and conservative about it if you engage in that.
Yeah, and I also completely stay away from it. And my main reason is peace of mind.
Yeah, and that's totally fair, because for some people it is like, it weighs on their mind when they've got that debt hanging over them, and so it just feels like, you know what, I'd rather get out from underneath that. I understand that could be controversial, because for some people they see it as like, no, it should be totally zero debt, whereas others are seeing it more like, no, that's actually part of how you use the fiat system to help end the fiat system, right? You are helping to sort of create that kind of inflation, let's say. And I mean, there are others who, as an example, they will wait for more easy structured products, things like kind of the battery finance sort of use case, where people are doing things like cross-collateralizing Bitcoin with some business loan that they're doing and putting them together into one package. And so we may start to see this kind of thing, or like where it's structured in a way where it's not a liquidation. There's not a liquidation per se. And that's where maybe you're getting into, like, if you look at the way the Bitcoin Treasury companies are doing it, like the strategies of the world, they don't have a quote unquote liquidation price. So they are able to get debt on really good terms, better than you and I can get as individuals. So important to think carefully about those things.
This is actually something that I sometimes unfortunately see. They look at strategy B, MicroStrategy before, and think, oh, I just do the same thing with a consumer credit of like 12% interest rates. And like, no, that's not the same thing what strategy B is doing. And your, I don't know, $20,000 consumer credit, but everyone his own. But the peace of mind is I think, an underrated thing. Also, as you said, I think that I just want to highlight that with the Excel sheet, really played those situations. What if Bitcoin goes down 60, 70, 80%? I don't think it will, but what if, like, it could happen? There can be something weird happening in the Bitcoin scene. All of a sudden we are 80% down. We have seen it in the last cycle of like 69,000 or something like that to 16,000 or somewhere around those range. That can happen again. It's not completely out of reach. But it brings an interesting topic up of time preference of Bitcoiners. And you're a long-term Bitcoiner, so you probably went on your own personal journey to like, when can I spend Bitcoin? I want to stack more. I don't want to spend my Bitcoin. How do you approach HODLing for the long run, but also not missing out on your life and dying with a huge stack of Bitcoin?
Yeah, so I think this is one of those, this is going to become a more important thing as well. And this is where kind of the leverage and the lending and this kind of aspect of it can come in as well, because sometimes people say, hey, instead of spending down, just borrow against a small amount. Right now, again, this comes, again, the same disclaimers, all the same things I was saying before. But I guess there's different schools of thought. Some people think of it as, have a fiat cash buffer, and you might, there's different schools of thought, but let me lay a few ideas out, and at least this is what I hear some people are doing, right? So as an example, there's, some people who just are always living within their income. So they are just not touching their HODL stack, right? They're just always HODLing because they have income. They keep it working. That's a totally, a very humble and good way to do it. Another approach, there might be some who are, like I said, lending, but maybe borrowing against a small percent of their stack and just kind of continually increasing that. As long as it's a very small percent of your stack, it can theoretically, it can sort of work. I would say there are risks to that also, that maybe the lending provider doesn't give you a rollover, or of course, like you said, a big drawdown, like an 80% drawdown. But I guess what people might do in that case is, because they only borrowed a small percent, they can load a little bit more Bitcoin collateral to not get liquidated and sort of ride out the bear cycle that way. Another approach is more like, during big runs up, people sell some for fiat, right? Because they need some fiat to obviously pay their bills, pay their rent, feed their family, whatever. And so I think that's another approach. And for some people, that might look like, okay, they've been stacking for a while, and now they take out, 3 or 4 years worth of fiat runway. And then they just they've got most of their HODLing, but they've got like a few years, some fiat runway, just to, like, if they are retired, let's say they're not working anymore. So it's kind of a few of those. Those seem to be the main. Well, I guess the other kind of idea is just selling a percent every year. Like, so if you think about, for the people who do want to retire and so on, you might have heard of the FIRE movement, right? This kind of financial independence, retire early. It was really popular a few years ago. I think it's maybe not as popular now, but there's still, podcasts and people talking about that. And they talk about this whole 4% rule. So it's kind of like, you see some people who might just kind of take that idea and transpose that into Bitcoin and say, okay, out of their stack, they're willing to spend 4%. Now, other people believe that number should be higher. Like, I think I did an episode with Jeff Ross a little while back, I think last year. And he was saying, actually, if you're going to spend down, you could probably spend down like 8% of your stack a year. Now, I don't know, maybe that feels a bit high to me. I think 4% probably seems a bit more reasonable. But yeah, I've seen kind of a range of these different approaches in terms of what people do to, I guess, if they're trying to retire. I mean, for me, I'm still working, I'm still doing the podcast. So just trying to live within my means. But yeah, it is fair to sort of think about that balance, because you can't just sort of put your life on hold forever and max stack to the maximum. So there'll be times where, life events happen. And if you need to spend, it's okay to spend for some life event or to, keep your family nourished and doing okay. So, I think it's funny because online there are these, let's say, stereotypes of like, oh yeah, live under the bridge and memorize your 12-word seed, don't even have a hardware wallet, and and this kind of thing. But actually, when you meet hodlers in real life, I mean, you meet people at conferences and events. I mean, there are guys who have families and, they're relatively normal. Now, yes, they might be quite obsessed about lowering their expenses so that they can stack more sats. But, you reach you reach a happy medium. Ideally, you reach some kind of happy balance between stacking for the long term, but also having, having an enriching life for you and for your family. So I think it's, what I've seen people do is probably some option or combination of those things. For some people, yeah. So I guess summarizing, some people borrow against their coins, some people just straight spend down, and maybe other people, they sort of wait for a bull run and take some fiat chips off the table per se in those times to sort of ride through the next bear cycle.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have two ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition, for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if you're in a jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. That is the different strategies is really fun to talk about, especially with those people who are close or at 100% of Bitcoin allocation, like myself actually, of like how do you balance that? Because maybe you live within your means, but there's like 1 month where you have to spend a little bit over, and then the next month is way more frugal. So like, okay, do you then take a little bit out, or do you go short term in debt in fiat? Like there's usually on accounts, at least in Austria, I have like a $10,000 overdraft that I can always use and pay back whenever I want. So there's like a lot of fiat small tools that you can use that are not that complicated. So it's super interesting how people approach it. And I just recently, and I'm really curious how you think about that, and you do it also with your podcast. I now pay people in Bitcoin since literally last month I started that, and it hurts me way more than the same amount when it goes from my fiat bank account. I know it does not make logic sense because it's the same amount, because if I spend it in Bitcoin, I could also just say, if I spend fiat, I could also have bought Bitcoin with that same amount, and then it does not make mathematical sense. But there's some barrier that I don't want to spend my Bitcoin. And I actually overcame that with having two different setups of like one cold storage and one hot cold storage, where it is self-custody, it is cold, but I can spend from there. It's like, okay, if it's there, it's okay if I spend all of it. And once I have enough in there, I move it to my cold storage where it's not going away.
Yeah, I mean, I think I agree. The way I think about it, it's probably similar there. I have, let's say you might have a hot wallet on your phone that's like your Lightning wallet or whatever, and then you might have a warm, let's say a single signature as an example, that's kind of like a little, like you think of it as a somewhat warm, where you've got medium size amounts, and then for large amounts, multi-sig, cold storage, multiple devices, multiple locations, kind of the more deep security that you might not touch so often, whereas like your hot and your warm setup, that you're touching those more often and you're spending and earning into or out of those. So, I think you just get used to it over time. But the point is just like, if you're truly a believer in Bitcoin, then you are thinking about your net worth in Bitcoin terms, and you're trying to increase that number over time. So I think that's kind of effectively where it's at. And then people have to decide, what are they going to do in terms of living expenses, right? Are they going to just live within their means, or actually do one of those other options? So, it's. I think there'll be seasons and times in your life where you need to spend down. If you're getting married or having a child or these kinds of things. I mean, there'll be expenses, and you might need to spend some down at that point. But then hopefully you're earning back at some other point, and so I think as long as you are being careful about that and sort of thinking about your budgeting and all those things, I think it kind of all works out in the end. So long as you have some broad budget ideas that you are loosely staying within those, I think it's okay.
When you look at all in Bitcoin, just as the last question on that topic, there's this reaction from people outside of Bitcoin, like, oh, how can you be all in Bitcoin? Even like if you're 50%, it seems irresponsible. Within Bitcoin, that idea is like, oh, of course you're all in. Like, what else would you buy? Like, there's no other asset to even put your money in. Maybe owning your own home is an popular idea also in Bitcoin, not like as an investment, but just like building a family there and stuff like that. Maybe having your own business also is something acceptable. How do you look if being all in Bitcoin actually makes sense and is financially responsible?
So it makes more sense, especially if you are younger, right? I think the way people normally think about this is like, if you are younger versus older, that's where, if you're younger, you have more time to make it up. If you're younger, and you're still working, you can afford to be more aggressive about it. And so I think the other aspect of it also just is, if you are new, like if it's your first cycle, then you have to be more cautious about it. But I think over time, as you have been through a few cycles and now you're sort of at a level that you're comfortable with, then I think you can, because I think for those of us who are in Bitcoin and really, really into it, we see Bitcoin as the safe thing to hold, and other things are the non-safe thing to hold. So that's kind of how most kind of hardcore long-time Bitcoiners are seeing it. But, I think there'll be people who decide, hey, you need if you have some business, some of your net worth is in this business or in this house, so be it. I think you just have to make that call, but you have to be very judicious. Again, like Where before you, let's say, if it comes to a decision where you're having to let go of some Bitcoin because you want to, you need that house or whatever, you just have to be really sure that this is what you want and that you will be comfortable with that, because, in 10 years time, 20 years time, for you, that could be your personal 10,000 Bitcoins for 2 pizzas story. You could be like, oh, damn, that house cost, 50 Bitcoin or 10 Bitcoin or whatever. So you just need to make sure that is a small enough fraction of your stack that you're okay with that. But we all have to live. And so, and even more than just living, it's like you can live a life just like, living in a proverbial cardboard box, or you can, live a reasonable living standard. And I think there's also a time and a place to do certain things. That maybe you can only do certain things when you're young and physically able, and when you're older, maybe it's a different activity, or it's just not the same thing that you can do, and people slow down over time as they age anyway. So you also have to think about that aspect, like the arc of your life. That, let's say, a typical life expectancy is 80 years, something like that. So remember that past, let's say, 70 years old, it gets harder to do things. So you really have until like that time to actually go and undertake some of these different activities or things you want to do, whether it's traveling or maybe you want to do a business or some other thing. So, you really have to just balance all of these factors. So there's no one size fits all answer, unfortunately.
Absolutely. And Bitcoiners still have chairs in their homes. I've seen it.
Yeah.
Was the volatility for you actually hard in the beginning? I imagine now you're emotionally detached from the price, but was it hard for you in the beginning?
Yeah, for sure. I think it was extremely volatile in earlier years. I think volatility has come down a lot, actually. So it's not as crazy nowadays. But yeah, there were days when it felt like it would just rocket up and down 50%, 30%. And of course, as you know, at the kind of the end of the cycle, you get this big 80% drawdown, and you're dealing with that. And so yeah, but I think at the end you sort of have to just really focus back and think, well, what do I hold? Why am I holding it? Why do I believe this is going to win? And when you really think it out and think, okay, yeah, Bitcoin is a superior money. It's just going through this volatile early phase. And even now in 2025, it's still early, broadly speaking. Like, we've probably still got another 2 decades or so before we get like to really big mainstream acceptance and awareness and adoption. So I'd say we have awareness now, but how many of those people are actually holding Bitcoin? And even the ones who do hold Bitcoin, what percent of their net worth are they putting in? And then even there, when we talk about nation states, yeah, there's been talk about it, but how many are realistically really trying hard to stack, right? Other than Bhutan and El Salvador, who's like really actually trying to stack? It's not that many. Okay, yeah, I think the UAE was sort of, and it sort of came out that one of the sovereign wealth funds in Abu Dhabi was buying, I think, one of the Bitcoin ETFs, and I believe in the UAE there are, I think, some of the sovereign wealth funds have like investment in Bitcoin mining as well, or partnership with like Marathon as an example. So I think similar in Ethiopia for partnership with Marathon, things like that. But anyway, the point is, there's not that many nation states who are truly going hard stacking Bitcoin, right? It's early days. Even though they're talking about it, Trump has mentioned that he wants USA to be the Bitcoin and crypto superpower of the world, but it all just takes time. And I think it just comes back to it'll take longer than what you think when you're new.
It's super interesting what to see Donald Trump coming into Bitcoin and his development in there. How did you look at that when you saw him first on the Bitcoin conference, and now like with that crypto dinner that they had with Seyr and all those things that came out?
Yeah, so it's interesting because if you went back just a few years ago, like 2019 or so, I think there was like a video or a quote of him being like, no, the dollar supremacy can't be challenged, and now it's gone full 180. Now it's all pro crypto, like, and of course, there are some downsides to this also, because there are shit coins and meme coins and things like this that, it just seems to be, crime is legal now, apparently. So, people are just launching all kinds of shit coins and meme coins and whatever. And it seems to just be, quote unquote, it's pro crypto, it's permissive. And so it's very much a buyer beware situation, because, maybe you and I aren't going to get caught up in some meme coin, shit coin, but maybe your friends or family, or maybe one layer out, like your friend of a friend, they could get caught up in that stuff if they're not careful, or they don't understand how this world works of, this kind of insider dumping on outsiders dynamic. But, I think the good side of it is, though, yes, there are some of these meme coins and shit coins or whatever, but to me, it comes back to, what is the story for this cycle? It's Bitcoin ETFs and Bitcoin Treasury companies. I think, whether we like it or not, that seems to be where the interest and the money flows are. Substantial money flows are coming in via those means. So it's just a matter of understanding where things are and making sure that we are advocating for the things that we believe to ideally help Bitcoin grow, and ideally make it so that less people get wrecked in the next FTX or the next whatever.
Absolutely. When I orange pill people and I tell them about Bitcoin, usually one of the first questions is where can I buy it? I always only recommend Bitcoin only services, because I've seen it so many times where I recommend them something, especially in the early days where I was still a little bit more on the soft side for altcoins. Someone's of course you can also buy it there. And then they come back of I bought some Bitcoin, but also those 20 other tokens. And if they just don't have the possibilities with a Bitcoin only exchange or Bitcoin only services, it makes all the differences.
Yeah. But I think that to me comes back to, there's a desire, because let's break it down this way. There are people who just want to save. And for that, obviously, just buying Bitcoin, storing in your hardware wallet, your multi-sig, very easy, fine. But there are those people who want greater than Bitcoin returns. And for that, historically, people went to shitcoins, right? They went to altcoins because historically in them, that was the narrative. And in truth, that would happen like that. Like shitcoins would pump harder than Bitcoin, but they would also dump harder than Bitcoin in cycles gone by. But now it may be more like people go to these Bitcoin treasury companies if they want the hot sauce, or they want the more than Bitcoin return with risk and paying for it. But that may be, that may change even this cycle, right? That it may be people have Bitcoin, they may have some in their ETF, they may have some in their hardware wallet or multi-sig, and then they might have a small percent with Bitcoin treasury companies because they're looking for yield, this kind of thing. I think even in the 21 cycle, we saw the miners acted as a bit of that also, that people wanted mining as a kind of leverage play on Bitcoin. And now it seems like the financial system is sort of set up in a way, the current fiat fractional reserve system is set up in this way where these treasury companies can get really cheap access to equity and debt. And then for that reason, they can lever up in a way that you and I as individuals can't do. And so then I see that as, there'll be people who are going for these kinds of products, whether that's, MSTR and these other products, like the income sort of focused products from these treasury companies. So I think that may be one area that's a little different this cycle, right, compared to past cycles.
I started saying that I think half a year or so ago that I think that MicroStrategy and treasury companies and now Strategy B are the new altcoin season. Because I always hear in the comments of I just buy altcoins to outperform Bitcoin. And I'm I'm not so sure this will be the case now also, because I see now a lot of people that just want to have number go up technology. They actually say let's buy some Strategy B. I can do it in my broker. I don't even have to go on a crypto exchange. I think they kind of stole the thunder of the altcoins.
Yeah. And you know what? Arguably, as Bitcoiners, we would rather they buy a Bitcoin treasury company than buy an altcoin. So, yes, it's not the purest answer. Of course, the purest answer is yes, not your keys, not your coins. Get your own coins into your own hardware wallet, etc. But for a lot of people, it's understanding where they are in the cycle, where they are in their own personal journey, And to be fair, even for some old, more experienced Bitcoiners, they may decide with a small percent, let's say 5% or 10%, something like this, they may decide that they want a bit of Treasury company exposure anyway, because they want a little bit of leverage, but without getting liquidated and this kind of thing and having to execute it themselves. They would rather just buy, these companies or the various forms to get that leverage exposure because they want more Bitcoin.
Absolutely. You said something before. I think it was something like 2 cycles that you've seen till become really to mainstream adoption. What do you think is holding people back? Is it like education time? Do we need more infrastructure?
As the saying goes, science often progresses one funeral at a time. And so sometimes it just, there are people who are just holding on to older ideas, and they end up, as they age, they pass on and they pass that wealth down to different generations. And so, for example, think about the boomer generation today. The boomer generation arguably holds a lot of the wealth, more so than our generation, more so than the Gen Z below us. Well, I don't know. Maybe I don't know how old you are, but
I'm right on the border, but I'm still a Gen Z. So I think I'm 1998, and I think with 1997 is the cutoff.
Gotcha. So you're like one of the older Gen Zs, right? So yeah. So I think that's just going to naturally drive a change, right? A lot of boomers, they might hold gold, they might hold property and stocks and things like this. Whereas once that wealth passes down to, let's say, their millennial children and maybe some Gen Zs, they're going to be more inclined to hold some Bitcoin. And even those people who hold some Bitcoin, they don't necessarily go all in. It takes time. So yes, there are the people who just kind of learn about Bitcoin and they go all in, and they go really soon in the space of 6 months to a year. That they've gone down that orange pill journey and they're all in. But not everyone's going to be like that, right? So there'll be people who maybe they took a 1% or 5% allocation or 10% maybe, and then they stay there, and okay, that cycle plays out, and then they slowly increase that way. So I just think it can only grow so quickly, and I think that's probably the big thing that I've changed my mind on, which was when I was new and thought, oh wow, this thing is going to happen so quickly, it's going to be a few years, and then the whole world is. No, I think there's only so fast it can grow. There's only so quickly that we can, let's say, suck the monetary premium out of other assets and bring it over to us, into our world, into Bitcoin. And that we just have to be humble and accept that there's only so fast that it can happen. Now, of course, I mean, if it happens faster, great. I'm all for it. But I'm just trying to be realistic, because I think people get their expectations set wrong, and then they are disappointed, right? So even in the 21 cycle, every man and his dog thought we were going well over 100K. I thought we were going over 100K, but we didn't. We stopped, we topped at like 69K or whatever, and that was it. And so I think people are going to do the same thing. And to some extent, we live in the social media attention economy. So the kind of engagement of like, 1 million this year or 1 million this cycle and this kind of thing. But no, I just think that's extremely unlikely. I think the more likely is sort of diminishing returns, diminishing volatility. And that is what we've seen. That's objectively, statistically, that is what we have seen over the last, let's say, 15, 16 years that Bitcoin has had a price. It has been diminishing returns, diminishing volatility over that time. So we should expect that going forward, as opposed to the people who are sort of wishing that, to me, that's wishful thinking, that all of a sudden we're just going to have this S-curve moment. We're just going to have a suddenly moment. I just don't think it's that likely. While, of course, I would love it if it did, it's just not that likely.
It's an interesting point because like Bitcoin for me has 2 factors of growth when we look at the price. It's the one factor is just adoption, more people coming in. And the second factor is like the fiat is getting worse. It's devalued, of course. If the fiat is devalued, Bitcoin is also rising. And in many ways, I actually think it could be good for Bitcoin, but maybe bad for overall the world if Bitcoin is adopted too quickly. This probably also means that the fiat system is going down in a very, very quick fashion. And I always bring the example of the Titanic up. If the Titanic's sinking and most people are still on there, and there's like a small lifeboat with Bitcoin, and we have to get people on there, we don't want the Titanic to sink too quickly. We want to build like gradually out the infrastructure, the layer twos, the services, the financial institutions around that, to be able to have, like, now we have maybe 200, 300, maybe 500 million people on Bitcoin. I've seen so many different statistics, but there are like 8 billion people on the planet. And even if you go on the math with like 500 million people, how many people actually use Bitcoin, the main chain and the layer twos and stuff like that? So maybe there's like even an incentive to let that fiat system ride out over a longer period of time versus going next week to 10 million.
Well, I think whether we want it or not, I think it's just, it can only grow so quickly, right? Because it's sort of like we've reached a certain level of scale and size that it's just difficult to quickly grow. Like you need to find massive buyers to really commit, and it's not that easy to find them. Of course, maybe a large nation state, if a bunch of nation states were to start printing fiat to buy Bitcoin, then okay, yeah, maybe, but it's just unlikely at this point. I think, governments have, countries around the world, there's a lot of these social or cultural problems that they're dealing with, economic problems that they're dealing with. It's unlikely that they're going to sort of care as much about the pet issue that you and I have, which is, hey, Bitcoin is the answer. Now, of course, I think it is the answer. I think it would be one of the biggest levers to change things at a social and cultural level. I think a lot of people don't understand that aspect of how Bitcoin can fix cultural things and social things in our world. But from their perspective, they see it like they've got all these other issues to deal with, whether that's, wars going on around the world or these different things. So, there's only so fast Bitcoin can grow. And I think that's just kind of the realistic expectation that I'm trying to hold. And also, here's the other thing. My friend Safdien Ammous talks about this idea that as more and more people go to Bitcoin, it sort of stops some of the inflation aspects, the more inflationary aspects of it, as more and more people start to actually use Bitcoin. But I mean, at the same time, you could say, look at these treasury companies. They're using leverage, some of them, or all of them, or at least the ones that are doing quote unquote financial engineering. The ones who are merely holding Bitcoin, okay, maybe not, but we are arguably going to see more and more companies start to do that. Just recently, as I'm sure you know, the GameStop news came out that they were looking to do this kind of strategy as well, this kind of financial engineering to acquire Bitcoin. So for now, it's more in the camp of, just a few years ago, it used to be, it's only small countries, only El Salvador. That was kind of the narrative. Now, of course, the US government has come out saying we're going to be the premier crypto Bitcoin nation. And I think the similar thing now is with some of the corporations. It's sort of only the corporations that are seen as, those are zombie corporations. Those aren't kind of really, truly profitable corporations who are jumping on the Bitcoin bandwagon. It's just people who are, that's the narrative, right? I'm not saying I agree. I think maybe right now that's sort of where it's at, but eventually in the eyes of the normie, it'll be seen as, no, you need to hold Bitcoin. If you're a serious business, a serious entrepreneur, serious investor, you need to be holding Bitcoin. You need to be doing something with Bitcoin, or you are just, it's like you're in the boxing ring with one arm tied behind your back. You're leaving yourself at a massive disadvantage if you don't do this. So, over time, it will evolve. That narrative shift will occur. We are still some time away from that, though, from like it being, let's say, commonly understood that every business should do that.
Yeah. And the company stories is also quite fascinating, because when like MicroStrategy was the first publicly traded company that did it in 2020, and now we have 80. So yeah, of course it's like 80 companies. It's not bad, but it's not like 2000. we have in the S&P 500 still just one with Tesla, and they hold only a small portion of their what they could hold in Bitcoin. I think they have around 9,000 or 10,000 Bitcoin. But, yeah, you're totally right. Those things take longer, and especially with companies, because there's not only one individual, there are several individuals that make a decision together, and that network effect. That's also an interesting one. The career risk. Do you think that career risk will then also flip within the next like 2 cycles? With maybe now there's a career risk where a CFO says, "Oh, if I'm pushing Bitcoin now, what if we have now a downward cycle? And even if I'm a Bitcoiner, like I'm scary to lose my job. And when will this career risk flip to the other side, where if you're a CFO and you don't have a Bitcoin strategy,
right, that's a problem
you
for
might be replaced? Yeah, it's bad for you."
Yeah, good question. Hard to say. I think over the next year or so, I think we'll see at least a few more big ones come over. I think an interesting one is Facebook or Meta, because Mark Zuckerberg has a goat named Bitcoin, and like you hear rumors that basically all these tech CEOs, they all have Bitcoin personally. These are the rumors you hear. I don't know for sure, but it would make sense, right? These are tech guys. They would have looked at it at some point and thought, all right, maybe they tell their guy, hey, just get me a little bit just to, not have zero. But maybe they've decided, hey, it's not right for the company, right? Or I'll give you the example of Microsoft, right? Even after Saylor pitched them, what did they vote? It was like 0.55%, right? So it just shows you how early we are in terms of like the boomer normie mind, that it's not there yet in terms of, because as you said, the C-level of that company, the C-suite, the CEO and the CFO and all these people, even if you had them on board and even if you had the board on board, the shareholders may not be on board. And that was the case with Microsoft, right? 0.55% is very, very low. It's not enough to really drive a change. It'll come eventually, but it might be another 1 or 2 cycles away. Like here we are in 2025. I don't know. Like I could see it probably in the 2030s, in the early 2030s is probably when we start to see like serious, like it would be crazy for you to not have at least some Bitcoin. I think that's probably around when it starts to happen. Of course, I wish it happened now, but I think realistically, end of this decade or early next decade is more realistic there.
Interesting. One last thing on the cycles. How do you look at the crossover to fiat with like stablecoins and Bitcoin, stablecoins on other cryptos, DeFi applications? Do you see that maybe as the bridge that slowly gets adopted from fiat to Bitcoin?
Yeah, for some people, and I guess for it, even on stablecoins, there are people who have there's a range of there's a gamut of views even in the Bitcoin world, right? Because there are some who are like totally against them, who are like, see that as that is the new CBDC, or look at the surveillance machine that's being created. I'm more I think, let me put it this way. If you have a fiat bank account with a fiat bank card or a fiat debit or credit card, I think you are already under a similar level of surveillance, whether we like it or not, right? Now, I've been against FATF and AML for years. I think it should be abolished, but I think it's unlikely to happen anytime soon because we need to sort of get an Overton window shift to get it there. So I see them as, look, I think people will use stablecoins. I think it's probably, I think Tether put out a number. I think they said they have 400 million users worldwide, whereas Bitcoin users worldwide, maybe it's like 100 million. And if we're talking like on-chain Bitcoin users, that might be more like, 15 or 20 million in terms of like on-chain Bitcoin users. So yeah, I think there are a lot of people who will use stablecoins who have not yet come to Bitcoin, and stablecoins might be a way that they do that. I see it like, to me, it would feel inconsistent of me to say, it's okay for me to have US dollar access. I'm an Australian citizen and I can access, USD foreign exchange accounts and things like this, but not for you. It seems a bit, off to me. So that's why for me, it's sort of like, I understand why people, like the idea of having a stable coin. Yes, they are surveilled. Yes, they're not decentralized. But will people want them? Yeah, I think there will be a lot of people who want them. And I hope that we can convert as many of those people into real Bitcoiners as we can. But, I think the people who see it as like, you should criticize the stable coins and get people to only use Bitcoin. To me, it's just not recognizing where a lot of these people are at in their lives, that maybe they can't afford to, or they are not willing to just jump straight to Bitcoin. Of course, again, I wish more people would just come straight to using Bitcoin, but this seems to be, there's a product market fit there that it's hard for us to deny. So yeah, for me, it's more like I have used them before, but more in the case of like, let's say I'm going to a conference or I'm getting someone wants to pay me and they can't do it in Bitcoin. As an example, if I'm going to a conference and they're asking me to come and they're offering to pay like a flight and a hotel or just a hotel accommodation, something like that, and they're not willing to pay me in Bitcoin, but they would pay me in stablecoin, well, okay, I'll just take it in stablecoin and instantly flip it into Bitcoin. Something like that. That's where I've used it personally, but I do see them as much better user experience than doing a fiat wire. So, because if you compare, like, to me, it's just a crypto form of dollars. And think about whenever you do a fiat international wire, all the details you have to type in. You've got to type in the name, the address, SWIFT code or IBAN code. You might have to type in the purpose of the transaction. You might need to have a description in the box like that. And then if any one of those details is wrong, it gets sent back and then you have to do it all again. It's a pain. So I can see stablecoins being a simpler user experience than that. Now, will that help the US dollar dominance? Yeah, probably. It's not that, yeah, I think it probably will. I think stablecoins will help the US dollar in a sense attack a lot of the weaker fiat currencies around the world. We can like it, we can not like it, but I think that's the likely outcome. Of course, I believe Bitcoin wins longer term, but that to me seems like the short and medium term pathway. So, be wary. Yes, they are surveilled. Yes, they're not decentralized. But, I'm okay with them and I'm okay with using them in certain circumstances. Though, of course, I prefer holding Bitcoin.
A very realistic take. I like it. I asked each and every one of my guests one question, and the question is, what can we learn from you besides Bitcoin?
Well, I guess, am I cheating by just saying you can learn some Austrian economics? Because that was what my show was also. But yeah, I think for me, it's probably, when I started my show, it was Bitcoin and Austrian economics. This is how you can learn about the school of economic thought that is not taught in your school or your university, or if it is, they might give you a brief mention of Hayek, but they won't sort of give you a deeper appreciation of the classics and the people who are, as in the world of Austrian economics, people like Mises and Rothbard and Hopper.
It's super interesting because I am Austrian and it was super fun in the beginning because I heard everyone talking about like Seyfried and you and all the other ones like talking about Austrian economics. And in the beginning I was like, why are they talking about Austria? Because I didn't knew about Austrian economics.
Yeah.
And I was like, nothing is that special about Austrian economics. I know it, like it's not a special economics thing. I like the actual economics of Austria, not the theory around that. So I actually learned about Austrian economics as an Austrian just because of Bitcoin. And I went actually for a year to economics university, and I actually talked with one guy that also studied economics completely, like his full studies in Austria, and he also did not really learn about it. And then I was shocked that like you don't learn about Austrian economics and the theory in the University of Austria in Vienna. I mean, there probably are some courses, but probably not everyone learns about it, which is a shame.
You know why it's called that, right? It was like a put down, right? So it was kind of the German school, and they would look down. It was kind of like a put down. It was kind of, those Austrian economists. It was actually a put down like decades ago. And then, of course, nowadays, most of the modern day practitioners of Austrian economics are in the United States, funnily enough, or ironically. but that's where it came from. That's where that's why it was called Austrian economics. And if you look at what Mises was saying, it's not, when he was like writing Human Action and some of these things about methodology, he was trying to just codify or sort of clarify, this is what we're doing, right? Because from his perspective, that was just what good economics is using this deductive method, the method of the Austrian economists. So so I mean, that's why it kind of got that name, because some of the early, practitioners were Austrians, but it was like a put down relative to, at that time, German school of thought.
Interesting. We didn't even touch Austrian economics. Maybe we can do it in the second round. Thank you so much already. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest is. And I think I already know kind of an answer what you will give. The question is, what is one non-Bitcoin book you can read to learn about Bitcoin?
Oh, for me, it's The Ethics of Money Production. I love this book. It's by Guido Hulsmann. I did an interview with him, and he has a newer book that I did another interview with him on. But honestly, if you read The Ethics of Money Production as a Bitcoiner already, it will just it'll make you feel even more sure about this thing that we're doing here, because it will help you understand the many ways in which fiat currency has hurt society, and that there are better ways if we had real free market sound money. And so I think The Ethics of Money Production doesn't talk about Bitcoin at all. And I believe it was released around the time of the white paper, funnily enough. So it was, that book actually came out in 2008. And so, it's a fantastic book. One of my favorites.
And for people that might have not read it, if you just put in the name in Google, you can actually go to the Satoshi Nakamoto Institute and like it's just a PDF.
It's free
there.
Online. Mises.org and the Nakamoto Institute have it there for free. So definitely go and check it out. It's one of my favorites. I still remember the night I read that book. I think I was away on a work trip or something, and I had my laptop and I was bored, and I was just sitting in the hotel room because I was on a work travel trip, and I just read the whole thing in one night. I just kind of went through it, and it was just incredible. Really made a difference for me. So, I think a lot of people, especially Bitcoiners, would really enjoy that one.
Really cool. Thank you so much, Stephan, for being on the show. Before I let you go, where can people find your show and your Twitter and everything like that?
Yeah, of course. It's StephanLivera.com, x.com/Stephan Livera, Stephan Livera on YouTube. You can just search my name and you'll probably find me. Thanks for having me.
Really cool. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.